Alright, so right here we have Ethereum USD weekly chart, and as we can see, 2021 was all uptrending, and going back to basics, simple technical analysis and market structure. The market since July that put the low at 1800 zone has been uptrending since then. We are currently facing a crash, the way that many people call it, or just simply a retracement that is taking longer that we all expected. We all thought that Bitcoin and Ethereum were going to be in the moon by the end of the year, but it was not like that. And as traders, we have to adjust and adapt to what the market is giving us, and always adjust the analysis. Okay, so after we put this high low around 3100, sorry, we created a push higher that put us at around $4,800. This point right here, it is a higher high on a weekly time frame right after we broke the 40,000 zone right here. So we currently know that we have a higher high on a weekly time frame for Ethereum. Sorry about that. Higher high on a weekly time frame for Ethereum, and we can clearly see that this is our invalidation point. That's how I like to call it. So basically what this means is that if we start seeing weekly candles closing below this point, most likely the market is going to keep dropping on a weekly time frame. Okay, this is what is important, top down analysis, because we can have an idea on a weekly time frame, but once we go down to time frames such as H4 and daily, we can see with more clarity, more details. It's basically like seeing the maps. You have your country, you have your city, you have the streets where you live. So basically, we have a bigger picture that once we zoom out, once we zoom in, we can see more details as to why it's happening or what we're looking. So for now, on weekly time frame, we know that we are at a key point level. Okay, most likely I would like to wait this currently weekly candle that just opened today at 7 p.m. be over, but I will not let go any trades that are given or available during these couple of days. Okay, keeping in mind this higher time frame. So me personally, I would like to see this weekly time frame close bullish, little more than 50% of this previous one, just to see that buyers are stepping in, volume is coming in. Just keep these three indicators as help, just to help me out, but I am a price action trader, which is based on support and resistance levels, candlesticks, and price action. That's the best way to trade, in my opinion. The best indicator is the price. So coming into the daily time frame, we can see more in detail the downtrend that we've been having since November. Throughout this entire zone, we've been having lower highs, creating lower lows. So you can see right here, and we finally extend even. We did a big push lower to the weekly levels. Now, at this point, it is not worth it to look for any sales in leverage, just because the big push just happened. So as a trader, I know that after a lower low is put in, most likely we're going to retrace and create a lower high if we're going to get lower. But I can take advantage of this move, keeping risk keeping risk at always minimum, or as long as it feels right for you. I usually risk between 2 to 3% per trade. This is the moment, in my opinion, that you give the market some time. You do not trade, you just sit on the silence and watch what is going on, and then once your opportunity comes in, you pull the trigger. As a trader, it's not necessary to trade every day. With good trades, 1 or 2 trades a week, it is more than enough to make good gains. For now, we're still downtrending. And yeah, also on the daily time frame though, I do like how this candle closed, because usually once this candle close and this one open, it puts a low and it usually moves up, creating a engulfing type of structure, which is good for the volume into early stages such as daily, that will contribute to the weekly time frame, for that weekly volume to come in next Sunday. Thank you guys for watching. Comment below any topics that you would like me to go over. Like and subscribe. Thank you so much.